And now, what is the state of DeFi today and why is it thriving? With Taariq Lewis of Volume, Michael from Curve Finance, Ivan from Gearbox and Lobster DAO, and Vasily of LIDO.
Hello, everyone. Welcome again to TechCrunch, the Future of Programmable Money, sponsored by Sommelier. We're glad to introduce you to our panel. What is the state of DeFi today and why is it thriving? My name is Taariq Lewis. I am joining you from Volume.finance. We're the co-founders of Sommelier.finance, the co-processor for the Ethereum blockchain, and also the founders and creators of Sommelier Sellers. We're so excited to have you here with us today. I'm going to then bring on my guests and introduce them. First, we have Michael from Curve, currently the biggest DeFi project by TVL, covering $18 billion in locked value. And also we welcome Vasily, tech lead from LIDO. This is the biggest Ethereum staking project, currently with over $14 billion in staked Ethereum. And then we have Ivan from the Lobsters and from Gearbox, one of the most researched and the most high signal communities for developers in DeFi that is thriving with maybe over 20,000 members or more. Excited to have them here and with us. Thank you so much. And so with that in the introductions, we're going to kick off our first conversation by welcoming Michael. Michael, welcome. And please tell us about Curve. And we'd love to learn what is an automated market maker and what is the state of DeFi with automated market makers and why is it thriving? Welcome.
Thank you. So, yeah, as you said, kind of automated market makers are probably in the heart of today's DeFi, and that's I would say. Well, Curve is automatic market maker initially for stable coins, but now for volatile cryptocurrencies as well. And I guess I probably could speak a little bit about automatic market makers in general. Well, first about Curve, we started in the beginning of 2020, and basically we were not the very first market maker, automatic market maker, but just happened so that we become the biggest one. But anyway, so what are the automatic market makers? They are probably comparable to well, kind of well, there are exchanges, right, with limit orders and stuff like that. They existed before, and they were trading bots, and automatic market makers for user feel a little bit like exchanges where which kind of met trading bots and blended together. But under the hood, they are quite different. So in the past, exchanges were based on order books, basically, which probably was a paper book at some point, and
that's right.
And buyers and sellers recorded their intent, how much they want to buy at which price, and that's how it started. Well,
we used to yell at each other at one point, right?
Yeah,
before we put it on paper.
Exactly. So it makes sense to do in traditional world,
right?
Like which is not digitized. But once it became digitized, maybe it started to make less of a sense to have discrete orders. You could have continuous orders, and honestly, that could have been the case already. Already, like before blockchains, just when everything started being digitized. But nevertheless, it wasn't, and only with the arrival of blockchains, this kind of switch into continuous orders started happening with automatic market makers. So in the simplest form, you basically have some algorithm which basically makes a function between quantity of one asset and quantity of the other asset in automatic market maker, or maybe between quantities of 3 assets or whatever, right? So.
And these all run on the blockchain, right? So
that doesn't have to run on blockchain, by the way, but nevertheless, it started being popular exactly on blockchain. And the reason is, well, initially on blockchains, there were exchanges like EtherDelta, which had orders, and they worked pretty horribly in a way that it was very slow and used a lot of resources. And the thing is that on blockchain, storing things is very, very expensive, and computing things is far not as expensive. So, and that makes a natural choice to basically replace these orders with formulas. Of course, in this case, all people who basically deposit money in this in so-called pools, they kind of give their funds to be managed by formulas. Formulas are open to anyone to read. Anyone can verify that indeed their funds are managed using these formulas and nothing else, no surprises. And yeah, so that's how it started. Initially, it started with Bancor and Uniswap 1, and then we started Curve, which actually did some major innovation compared to those. Concentrated liquidity, concentrated around price 1.0 to exchange between stable coins. But then I guess the idea of concentrated liquidity started taking off. Well, there is also Balance, by the way, which went beyond 2 coins, although Curve also did. So, and then I guess, well, Uniswap 3 started introducing the concept of concentrated liquidity, as well as we started applying that to volatile assets as well, not just stable coins. And yeah, so it's basically different exercises around how to automatically manage cryptocurrencies with formulas.
Quick question for you, Michael. If you were to say the future of Curve, and is the future of programmable money, how would you describe then, given what you've accomplished, the future of Curve and maybe the future of AMMs?
Well, one thing is that probably AMMs and Curve will already expand to different sorts of assets, not just stable coins like initially, or not even just like cryptocurrencies. It's also trying to do foreign exchange, let's say exchange between dollar and euro, and yeah, things like that. And I think in future everything might be traded in AMMs.
All right.
I do believe that order books is an inferior concept. And
okay, so order books are dying, and AMMs are the future. All right, Michael.
I don't know. Probably centralized exchanges wouldn't agree with me.
I hope they're watching. I hope they're watching. This is great. All right, so Michael, we're going to take a jump over to Vasily of Lido. Vasily, welcome. Please introduce us. You're the tech lead at Lido. Please introduce us to staking. What is staking and what is Lido?
Hey, I'm tech lead at Lido. Lido does liquid staking protocols for various proof of stake networks and protocols that utilize staking. Staking is basically locking up your capital for sometimes as a stake and doing some work, putting yourself up to some risks and receiving rewards for locking capital and doing work, basically. For crypto networks that are based on proof of stake, that's usually validation work, participation consensus that requires some stake for security and is rewarded if you do it well and is punished, slashed if you don't do it well.
So stake is when you give the protocol your money to hold to prove that some work is being done. Is that what you're saying?
Yeah, you have your money as a collateral. locked as a collateral, and if you behave well, you get your returns, and if you don't behave well, you can get your money confiscated and burned.
Right.
So that's how staking works. And Lido does make liquid staking protocols, which basically when you is a protocol that get a stake distributed to operators who operate in the protocol, like validators and proof of stake, and gives a user, a staker, a token that represents their position in staking. That can be transferred, that is liquid, that is not locked. It can be used in decentralized finance, centralized finance, just transferred as a payment or something. So like the capital becomes not locked, and it can be used. It is usable. It is integrated in various DeFi protocols, and that makes it better.
Got it. And if you were to say, staking is thriving in DeFi today, what caused staking to? I mean, you're currently at nearly over $14 billion in stake assets in maybe less than a few years. What is driving this, in your view?
It's driven by two kinds of forces. One is proof of stake networks are thriving, are going up and to the right. These days there is a lot of more activity in next to the top proof of stake or soon transition to proof of stake like Ethereum than in proof of work networks. So this is a natural growth of proof of stake based consensus networks and protocols. Staking is a very useful cryptoeconomics primitive, so it will be used more. And the other is growth of DeFi, and that DeFi requires capital, and a lot of capital in crypto is locked in staking. So DeFi is hungry for capital, and liquid staking unlocks it and makes it usable, and it's a major driver for liquid staking.
That's awesome. If you were to say the future of Lido looks like X, what was X look like?
Our thesis, we believe that liquid staking protocols will be mostly winner takes most market. So we think that Lido is positioned to take this winner place in many protocols. And
so 14 billion is not enough for you guys? You guys want more?
Just starting, yeah. So and we do it in a way that is healthy and great for the protocols. That's our aspiration.
Got it. So every new proof of stake chain essentially will be possibly touched by Lido now and into the future. So you guys are just poised to capture all that growth opportunity that's coming from staking.
Maybe not every, because liquid staking is pretty operational heavy protocol, and it requires a lot of operational costs. Yep. For in terms of salaries and stuff. So not every protocol is worth building liquid staking for because it's expensive. Got it. For everything that is worth staking, basically.
Awesome. Well, thank you. All right. So moving from staking and now into DeFi communities. And glad to have Ivan here. And love the logo on your T-shirt, NGMI. Not going to make it. Ivan, tell us, welcome. Tell us about Lobsters and about Gearbox. What's happening in terms of DeFi community? Why is the DeFi community such an important part of the impact of DeFi thriving today?
Yep, Taariq, you set it up well. I don't have the same genius level as Vasily or Michael on this call, so I don't do math or tech. But that is a very important part that is missing from, let's say, this every protocol needs, however technical it is, that is the community, whether it's community of developers, researchers, investors, or whoever else it is. So my role is a bit more on the soft side, let's say, and yeah, one of them, which is in question, is the Lobster DAO, which is just an open research chat, and the other one is Gearbox, which is more technical, doing composable leverage and actually integrated with Lido and Curve soon enough. So in terms of the communities with Lobster DAO, how it started is basically 4 years ago in the midst of the bear market, when there were about 100 people left. I think all of the Telegram chats, Twitter, there was no following, there was no capital. I think crypto total TVL was below 100 billion, right? It was really a sad place. People were quitting. I think you were going into IBM at some point.
I was going to IBM. Yes, I was interviewing there.
Basically, yeah. So yeah, the Lobster DAO started just as an open chat to research new things, to see like who is still around. Obviously, to cry about the people's bags going down. You cannot go without it. And over time, it was just like building a community which can research a lot of different things at the same time requires a lot of moderation and having no agenda. So whenever you see other communities popping up with some monetization model, it usually doesn't end up that well because they have an agenda in place, right? They're geared towards a certain point and that destroys some kind of neutrality.
Right.
So yeah, the goal here at least is to keep up that neutrality to research new things. For example, Lido, both Vasily and Michael were like early members of Lobster DAO as well, and they continue to be so when they have time from the important work, yeah.
But I want to just make a point. It's very tempting when your community, when you have a bunch of people talking about money and talking about new forms of money for people to shill, to scam, to sort of try to disrupt and take away this high signal. It seems like you've been able to capture high signal in the DeFi community. I mean, that is not something that is something that's pretty impressive. How have you managed to maintain the high signal of focus on development, project, sort of validity and project value versus get rich quick schemes and other things that are not as interesting?
Yep, thank you. Well, that's thanks to the contributors who were there at the very beginning, because as I mentioned, appeared at the beginning of the bear market. At that point, people barely had any money aspirations at that point.
Got it.
And early members, for example, like the guys on the call, like you were there, like, for example, Andrei Kronia, who was there at the start, all of them started contributing. And it was like a friendly group chat at first. It was just open, Right. That's what I like about open communities, is that you don't need to make, of course, if you discuss some important deals or investments, that you might do private, right? But everything else, even if we develop an open source protocol, there is no point in having it gated. You don't, for example, allow for, sometimes you don't want everybody to express their opinion if they don't have the expertise, but you benefit from having that information open. And that's, I think, how the best DAOs develop, is that contribution can be limited to those who have proven themselves, but the information access should be open. And that's what's cool, right? For example, take into account whatever Curve and Lido are doing. It's very complex stuff. Not everybody will participate, right? Very few people, like a handful, might even do something with it. But it's about the information being open and welcoming, because then it's the equal opportunities, yeah.
Okay.
But as you said, with time, the market gets bullish. People were too much excited about a bunch of random stuff. So yeah.
Okay, so you have Gearbox seems to be the next initiative in the future for you. If you could give us a quick 30 seconds on what is Gearbox and what's that looking like based on what you've built. Could you share with us here?
So definitely. Thank you for the chance. Gearbox is building composable leverage as such that when you have leverage on exchanges or in a bank, you have it in a siloed place, right? You can only use it within the exchange. And let's say if you go long or short, that's it, right? You cannot do anything else with it. What Gearbox is doing is allows you to create, let's say, that credit account being a smart contract, which then allows you to combine positions. So for example, you could go stake into Lido, the tokens you get back from it, you can put it to Curve for farming. So connecting all of the DeFi and even infrastructure of NFTs pieces into one leverage protocol that is essentially underneath it. That's the idea.
Okay, so the phrase that pays today is composable leverage. I've never heard that before. This is the first time we're hearing it here. Composable leverage. Did I get you right, Ivan?
Yeah, composability has been hyped for the past few months. So yeah, many protocols are prioritizing that. All
right, I can't wait to see about composable leverage. All right, we're just going to take a quick minute to share an announcement. This is from myself now and the Volume team. Thanks, Ivan, Vasily, and Michael, and thanks to everyone who's watching. We just want to make a quick announcement for Volume. We're really happy to say that we've been really lucky to have a 3.5 million pre-seed round led by great investors, including Michael here from Curve, Anatoly from Solana, the Alameda FTX team, Simply BC, New Forum Capital, NGC, and others. Thanks all for essentially helping us continue to build on Sommelier, as well as build on Curve, build with Lido, and of course, now the way we focus on decentralized liquidations, we're going to be hopefully building with Gearbox on composable leverage, because every time there's leverage, there's a liquidation. Check us out at volume.finance. And also keep in mind, please check out Sommelier at sommelier.finance as well. Okay, with that, we are going to now wrap up with final thoughts. Okay, so kicking off with final thoughts as we close this panel, I'm going to ask you all to send us off. Vasily, you're first. Final thoughts for the state of DeFi.
It sometimes feel that when you walk in DeFi, it sometimes feel like you're drinking from a fire hose, but it's super interesting. Get into DeFi.
Get into DeFi. All right, Michael, you're up.
Well, building for DeFi is important because DeFi, in DeFi you build Web3, not World War III, which is great.
Wow. All right. I like that. Build for Web3, not World War III. That's another quotable quote from this panel. Thank you. Ivan, are we going to make it? Your thoughts?
Well, yes, don't look at the t-shirt anymore, but fully agree with DeFi and Web3 in general. You build open systems. So we went from open information now to open finance. And that's a great trend in general.
Awesome. Thank you. And last thoughts for myself, please check out our panelists' website and DAOs, Lobster DAO from Ivan and Gearbox, Vasily LIDO, please make sure to check it out. Also Michael and Curve.fi, Curve Finance, as well as Volume.finance, and finally our sponsor Sommelier.finance. If you're an engineer or investor looking to build in Web3, please come join our projects, come talk to us. We'd love to have you and share in our open systems. Thanks to the panelists. Thank you, TechCrunch, and thank you all who stayed on this panel. Pleasure to have you with us. Bye-bye.